Good day, all. Ira Epstein, and I'm back. It is Monday, July 29th, 2019, just after 5 p.m. Central Daylight Time. Sorry for being a little late, but imagine, first day you're back after a week, you're buried. That's all I can say. This is a big week, and if you're trying to grab hold of what's going on, you've got a lot of economic data coming out tomorrow that it will get everybody's attention for 10 seconds. After that, they're going to go back to thinking, what is the Fed going to do on Wednesday when the FOMC meeting ends? What is the speech, or not speech, but the statement and then the press conference by Fed Chair Powell going to say? The market will then take a small breather for a day, and then it's going to focus immediately on the employment data. Right now, they're looking for about 166,000 new jobs created and the employment rate to fall to 3.6%. Then we've got the U.S.-Chinese trade talks going on as we're talking. We'll see what that's going to do. They actually kick off now. So as I'm talking to you at 5 p.m., they may have begun. You know, there's all these different time differences as to how it works. Metal's getting a little bit of a bid at this point as we're seeing currencies backing off. The big event of the day was the beating the British pound has taken under the new Prime Minister Johnson, who apparently is still bent on leaving the European Union without a deal. He wants them to renegotiate, and they have said no. So what do? October 31st is coming, and he has pledged to leave the EU by then. You know, they may kick him out. They may stay in beyond then. You don't know what's going to happen. But it's certainly not good news for the pound, and it has been coming down. On the energy markets, we're all going to be looking to see what the API and EIA data does this week. And in the grains, it's still that growing season, so no matter what, rain makes grain. And even though we had too much rain at the beginning of the planting season, now you're at a different phase. As for the bonds and notes, well, you can imagine the market's going to be up, down, backwards, sideways, as traders have already done their thing, and now they got to decide how do they position themselves for the Fed, where the market is anticipating widely about a quarter-point cut in interest rates, possibly depending on what the employment data and what the Fed chair says. And it's funny because he speaks first on Wednesday, then we see the employment data, and my guess is he hasn't seen that data when he's going to be speaking. If you get overly strong data in jobs, what does that do for another rate cut? On the other hand, the Fed, if they cut this and they say it's an insurance cut and the numbers come out terrible in the jobs, they'll look bright as can be. You figure it out. As you look at the weekly area chart of closes, you can't get away from the fact that you're at all-time highs. Nothing wrong with that. This market's still acting very strong. You can see volatility, what's happened here. The market is starting to contract. It did it today. I don't know what it'll do tomorrow, but I can't imagine the market's going to go crazy one way or the other at this point, unless there's a piece of news that moves it. Right now, the traders are probably waiting to see what the Fed does or doesn't do. In the swing lines, you've got a lower low and a higher high. That is not a trend. The market is trendless in terms of that study, but the bias has stayed up because this market continues to hold and stay over as a whole the 18-day moving average of closes. I call that the line in the sand, and it has stayed over it. You would have to get back under it and take out this last break low to tell me that maybe we've got a distribution where the market's going to fluctuate and get some downside pressure. It's not showing that sign yet. The resistance showed up, and it's still doing its job. That is the upper Bollinger Band, this black line. And remember what Bollinger Bands are. They're an algorithm developed by John Bollinger, if you wanted to read about that. And the idea there is the market will trade within this 95% of the time. But it's more than that, because you look to see the direction, what's going on within the bands. Are the bands pointing up or down? I like to apply moving averages within the bands. John does that as well on some of his. And then the question is, when you first hit a band, how do you interpret what that means? I interpret that myself to mean that when you first hit it, the pros are taking some money off the table. That is not a trend change, but pros look for resistance support areas to add, come out of markets. Why? Futures are not the same as a stock. Futures are futures. They expire by nature. The leverage is totally different than in the stock market. high leverage, and now they've even got these new products that are 1/10 the size, and they're very popular. So you can trade an S&P, a NASDAQ, a Dow, whatever, and we're going to run some ads on this and explain how that all works. But you can be trading this for 1/10 the size to build positions, take off parts of your positions. They're fungible, so it's very interesting. But going into this week, which is one of the biggest weeks of all this economic data of 2019, there's just a lot coming out. We get Chinese numbers this week as well, seeing how their PMI is going. You've got lower low, higher high into a resistance area. Market's got upside bias and it's had it for a long time, and the market is overbought. When you come to the NASDAQ, the trend is up, higher lows. It's sort of stalling right here. You can come to this high, and that number was 80.4075. Then you step back, and this high was 80.5175. So suddenly we've got a pattern of higher lows but lower highs. That makes, to me, a lot of sense as the market's overbought, figuring out what it wants to do and what the traders are going to do going into and right after the FOMC meeting. That, remember, we're going to get the statement at 1 o'clock on Wednesday, then the press conference, typically at 1:30. I will be on Fox. Well, let me take that back. I'm going to be on Bloomberg. Got the wrong one there. I'm sure I'll be on Fox for this week, I hope. But Bloomberg, I already know at 9:50 in the morning. They just booked me, so I know that I'll be on there, and that's Central Daylight Time. That's well before the Fed announcement, but we'll be talking about the markets, I'm sure. What the futures are doing and what the traders are thinking going into the report. When you come to the Dow, do you disagree that the market fell back to the 18-day average, finding its way? Momentum has been pointing down, the slow stochastic study, just a bit to the downside, but again, we're not able to stay under that 18-day average of closes, so you've had this bullish bias all the way through that. In the Russell, the market did get under that 18 and 100-day average, never did quite hit the lower Bollinger Band, within a hair's breadth of it. Then it flipped back over it, and it's been trying to hold it. But overall, look at the black bands on the Bollinger Bands. Remember, the market will trade 95% of the time within them. The other part I've said is you look to see is the market trending or not. You're not trending. You're going sideways here as this market's killing time, waiting to see what the next move is. In the VIX, one of the things that I've been preaching, and I've been watching it over and over now for a couple of years, is that each time you're hitting these lower Bollinger Bands after you've taken this VIX down into this 8.5 to 12 area, if we want to call it anything like that, that the pros seem to come out of the woodwork and write puts against this, trying to come out at that 18-day average of closes. And I've been just watching this phenomenon. I don't know how long it'll last or if it'll keep lasting. It's always riskier when you're writing it higher when you're at a low level. It's easier to pop, for example, from a 14 level to a 20 than it is from 11 down to a 7. That's what takes place. It's just the nature of how this works. And that's something you watch at. Now, if you were back up into the 20, 25 level, I wouldn't be saying that. We're at a low level is the reason that I'm noticing that. In the T-bonds, do you disagree that the market's just hanging here at this 18-day average of closes, and you're watching the lower Bollinger Band and the higher Bollinger Band and the lower one, they're climbing in together, they're starting to grab prices. Very typical of a market that's getting ready for another move. That seems to be what it's doing, and it makes all the sense as traders are now waiting to see what the Fed's going to do. Some people still think a quarter-point hike. Most people do. Some think a half point's in there. There are others of us that say, hey, the economic data has not been that bad. Why even cutting? But the Fed has said, insurance cut, I guess. In looking at the marketplace, you're just hugging that average right now. The overall trend in this market is lower highs, lower lows, a bit more bearish than you have in the bonds, which have a lower low and a higher high. You can see that. As we come over to TLT, you are hugging this 18-day average of closes. Now, you got high enough today to take out 131.90. You hit 131.95, which means you ended this foray to the downside. Doesn't mean it can't regroup again, but now you're just neutral. You've got a lower and low, higher high, just hanging at that average. In the dollar index, you've been quite bullish. This market to even what President Trump is saying. Today he was talking, Fed, I want to see a bigger cut than that quarter point that they're talking. And he's talked about intervening and what's going to happen to the dollar. I don't know. If you don't have the Fed behind the intervention, where do you go? I don't know that the Treasury Department has that power. I think the market would pay attention, but I don't know how lasting it would be. So you're still very much in an uptrend. Is our economy super strong? Our dollar strong and relative? Our interest rates are good. In the euro currency, you can see how the market's gotten lower and low, and it's trying now with today. It's been hugging this lower Bollinger Band, and it's trying to come out of that configuration. If you can keep the red line and get it over 20, you might get more of a correction here. I was reading today, just before I came on this recording, how traders are now thinking the Swiss bank has come in and intervened in their currency. In the British pound, need I say more? This is how the market is viewing what Mr. Johnson, the Prime Minister, is doing. It is not favorable to what's going on. You've got lower highs, you've had lower lows. While I was out of town, you hit the lower Bollinger Band, and it's normally where I see pros take some money off the table. You've seen that before. It accelerated through that. We'll see if it can stay under it. It's only 5% of the time you stay under or over an upper Bollinger Band. So we'll see what happens. But to start a trend, you've got to push it in one direction. That seems to be what's going on here. In the Japanese yen, you're in a downtrend, which means people aren't running to other areas for fear. That's the Swiss franc is one of those areas. It's considered a safe haven currency, as is the yen. You've got the lower highs, lower lows. The dollar's just super strong. Support, big support, seen at the 9,200 level, 91.99.7, 91.97, the 100-day average, Bollinger Band 100-day. Then we get to Bitcoin, where ever since Facebook came out and got Libra into the news, well, you've peaked that whole thing out, and you've given back almost a third of those gains. It's pretty big as to what's going on. Momentum's still locked into the downside, lower highs, lower lows. You'd have to take out 10,345 to negate this pattern that's currently in there at this point. In Brent versus WTI crude, I'm going to have to leave very shortly these Septembers and just move on to now the differential. I'll go to the next contracts in them. But you can see you're just hanging here at the 18-day average of closes. Now, when we come to September Brent, the pattern has been one of higher lows, higher highs, but you're unable to stay over that resistance, that line in the sand, that 18-day average of closes, which when a market gets extended to a downside, it's not uncommon it pulls back up to it, to the upside, hits the upper Bollinger Band, 100-day average, on the correction, 2 days in a row, pulled right there, then it decided to go further down. So you're fighting that battle, and remember, you get API data tomorrow and then EIA data coming out on Wednesday morning for American crude. And if we see 57.64 was the last rally high, you've been to 57.17 tonight, but you got a lower low, higher high pattern. Momentum's trying to come up a little as the bias is down, a confusing chart. In Rebob gasoline, where was that summer rally that was supposed to be phenomenal? Didn't occur. And, you know, you'll say, well, we still have August. Folks, it's wind down period. I'm watching schools in Chicago getting ready very shortly for students to go back. My daughter-in-law is a teacher, and she'll, in 2 weeks, be back preparing all her class assignments as they get going. You've got here, if you take a look, lower highs, higher lows, there's really nothing going on. The resistance is the 100-day average in green, the 18-day average, and you are oversold. Here's the market that has annihilated traders, the natural gas. When I use the word annihilated, I want to use it very carefully, but you were way up higher. This market has come down. It has been a summer that's not been excessive in terms of need for natural gas. On top of that, you have an abundance of the product. On top of that, you're not exporting as much as you'd like to see exported, especially to China and other countries. And this market has worked itself down. Now, I wouldn't be surprised if you get some short covering. You finally come back to the lower Bollinger Band. You hadn't been there until about 5 weeks ago or so when you got down, then you had a nice rally. But the rallies have been what? They as a group, have not held. And this market keeps looking for lower price levels. So That's how I'm viewing what I see, at least. Here you've got all the markets open behind me. You know, you might want to take a look at some of the offerings we have from not only Modern Trader, but our other publications that we put out. The simplest way to do this is go to our website, www.iraepstein.com. From there, just click on free offers. Now, over the next week or so, we have been working hard on a new look to our home page, making things simpler to get around, how to find videos and so on. You're going to see that that is done. I've already been going through this with our tech people, and I love what we've got. It's going to be very interesting. I'll tell you when that's coming out. In the meantime, I'm Ira Epstein. Good to be back, and I'll see you tomorrow.